So hi traders, welcome back to episode 36 of the Forex market breakdowns. So today we are very excited. Last week we did share with you some beautiful setups. Some of those setups we said were high probable. All of them played out as expected, banking in some very good number of pips. So like gold, if you took the trades that we gave you, you'd have over 800 pips on dollar card. We also had some pips that you could have made on oil. We also had some pips that you could have made. So that's a very good week for us, and hopefully you guys, besides making money, at least you learned a lesson or two on how to calibrate good trade ideas and how to capitalize on the good trade ideas you've calibrated. So this is another week. Forget about what happened last week. We now focus on making some more, or rather identifying better setups this week and passing on lessons in the markets. So this week we'll dive into charts. We'll look at some of the assets that are moving up. So I'll probably do 3 pairs. Caleb will also do 3 pairs. And from that we'll be able to learn a thing or two about how to mark several things and about other things that are going on technically. Fundamentally, coronavirus becomes the biggest risk in the markets. So Monday and Friday markets have lost over $1 trillion. So we have seen the Dow lose almost 3% on Monday. We've seen S&P go down lower today. Shanghai Composite was low. Basically, all stock markets are in the red. The risk is coronavirus. So coronavirus looks like it will affect the economy longer than most people expected, or longer than most investors had anticipated. And when that happens, when the economy is hugely affected, the markets already reflect or are pricing in what is likely to be the impact of the virus on the economy. So the US Secretary of Treasury, Steven Mnuchin, has warned that probably the Feds might be forced to cut rates, or probably the US economy might also be affected, but we are likely to wait for at least 2 or 3 weeks. So we'll be watching for key economic data, NFP, consumer confidence, spending, GDP figures for the first quarter. So all these things are in the line. Traders are really anticipating these data figures to know how they'll affect the market. So fundamentally, I think the biggest risk now is the part of the market cycle, because we're in the last inning of the market cycle, and the other risk is the coronavirus, which is also likely to affect markets. So these two things combined or coupled together are likely to lead to a knock-off effects on assets, and we will look at that technically because that's how we trade. We only have fundamentals for us to understand the price moves. So we currently understand why we have the bear move, and the biggest risk, the fear prevailing in the market, is coronavirus. So let's go straight and do the chart breakdowns. So hi guys, so you'll get this video quite late this week because we have been practically very busy over the last 2 days. We have met clients, and we're also planning on some other things about the Forex trading masterclass. So that's why I'm doing this one. Actually, I'm doing it at around 6:34. So we had to stop while I was doing the chart breakdowns for me to come back. Anyway, we'll start off the analysis on gold. Last week, and if you watch the analysis that I did last week, we were pointing to gold moving higher. So we expected gold to get a move higher, at least to touch the 1650 mark, which you can see happened pretty fast. And currently today is on Wednesday, and the markets are trading at 1655. So we have closed above R2 on the weekly chart. We have not yet touched the upper line of the trend line of the channel, I mean. But if you use the Fibonacci extensions, you discover that we have gotten to 27.2, and if we'll be moving higher, then our next target from the weekly perspective is the 1750, which will happen eventually, but I don't think it will happen in a straight leg. So anyway, as long as gold is trading above R2 for me, as long as we're trading above 1625, I will stay bullish, and I will try and look for good opportunities to go long. But immediately we get a correction and we close above 1625, I will close below 1625, I will be looking for short trades, at least to touch the trend line the first time, and probably to touch R1. But this one is pegged on the close this week, which we can't tell now, it's too early. So today's on Tuesday, and if we get a solid close, which you can see we got above R2 from last week's price action, then probably we'll get a continuation to 1750. On the daily chart, if we go down lower, you discover that we have also moved higher. So 1675 was the level that was spiked last week yesterday, before we had a close lower below the R3 mark in the 1665. And you can see today it was followed by some steep bearish momentum, but markets came back all the way to close about 1655. So yeah, markets are quite volatile now, and part of the reason of the high volatility is the coronavirus outbreak and what is going on in the stock market. We have done a video on both, outlining both and how it affects markets. So if you're checking the two, you discover what you're talking about. So anyway, if you're getting a correction, I'm looking for 1625, like I said. So 1625 is the next crucial level for me, and at least this upper of the line, upper echelon of the line. So if we get a move to touch this upper line of the channel and probably 1625, then I'll be looking for longs to go higher. For me to execute a long at this point, I think it's too late. As much as we may be moving higher, I would look for 1750, but at least want a close above R3, 1670, 1675, a good close above R3. But as long as we have this long wick and some bearish momentum coming along, I'm looking for short trades. So on the 4-hour chart, not really anything clear. Yeah, we have rejected R1, and it looks like we'll have some momentum taking us back upward, but this momentum might only last to this point, and then we'll get a move lower, or we may get a correction and we break past this and probably touch 1700. So gold for me, I think the play is over. The play is almost over. Yeah, we may get a move to 1750, which is 1,000 pips from where we are. But for that move to be well executed, I think you'd have to wait for a close above 1675. And again, I'd at least play small positions for now, because I think much of the move, the safety in this trade was when it was trading down here. Now everyone knows it's a bull market, and when everyone knows something in the stock market, it always doesn't end in the right way, especially when people are buying it. So that's my outlook on gold. No clear setup, but I've at least outlined to you the different probabilities. If we moved down here and we rejected this point, I think that would be a better point for me to go long than where we are currently trading. So oil, for gold, I'd try and stay out, and the next pair that I'll do is oil. So like I said earlier, on the technical articles, I did some technical article on Monday. If you're in our WhatsApp group, if you're in our Telegram group, if you're following us on Twitter, you probably got the update, and I was pointing that oil is the next big move for me. So my attention is on oil. I think there's a big play coming on oil, pegged on the coronavirus outbreak and what's going on in the different countries, travel restrictions and all these things, which I've talked about in a video we did about coronavirus, which will be uploaded soon. So for oil, I think the market might be going down. So my first target is 47.5. If you go to the weekly chart, there is no precise pattern to show you that we may be going down or rather up. So it's quite mixed, because we had this trend line, we had a bounce there, and if I only adjust the slope of the trend line to fit onto this line, then you discover we have actually not yet got into the line. So yeah, that's a very different analogy from what you guys may have. But again, if I change this slope to probably fit in here, we may get something totally different. So you can start it there and you can move it there, and you see it's hanging. So I'd rather have this one, which is not broken, and yeah, so that's a better line. Anyway, you can see we have not broken past the 48.7, 48.8 mark. So before getting a close below this S1 mark, we're likely to still trade higher, we're likely to still trade above these levels, but I expect a break of this and a move lower, at least to 43.5, 42.5. On the way down, however, we can go down to the daily chart and try and identify where pullbacks might be coming in and where the probabilities will get lowered. So you can see we had a consolidation which came in form of higher lows and higher highs, and we got to $65 just before coronavirus hit us hard. And after that, you can see oil started moving significantly lower, dropping all the way to $50 before we had this correction to retest this line. So after this correction and this nice close, nice pattern, suggested that we may be going down, and I gave out a short trade immediately this signal was formed. And currently, if you took this trade, you're up around 300 points from 53.7. Now we're at 50.7, so around 300 points. I still expect this one to move lower. I still expect a move lower, at least to 47.5 first, 45, and ultimately even 42.5. For oil, I don't think there's a return for this commodity. we are losing value, we are moving lower, and I try and stick to the trend. I try and follow the trend if I'm trading this market right now. Like if you're trading this market like I'm doing it, I tell you to at least stick to the trend, follow the trend. So you can see we had two bounces. So the first bounce, the second bounce, then this extension, then this break consolidation coming back higher, now moving lower. So I'm looking for S3 first before after this point on the 4 hour. I look for 47.8, but at least try and sit tight, maximize on the move lower, because the odds are tipped greatly to favor the downside on this commodity. And that's my outlook on oil. Again, a one-way bet, like I did last week. I told you gold was a one-way bet. On oil this time, I think a short trade is a one-way bet. This week may end while we're trading at 47.5, 47.2, depending on whether Feds may change or whether we may get some emergency shocks. But I don't see them coming anyhow. So I expect this one to keep on moving lower. As demand slows, as the virus spreads, oil is going to be hit hard, and that can only be reflected by lower prices. So that's my outlook on oil. And I'll do the next pair. So the next pair that I'll look at is GBPJPY, and GBPJPY. I'll start off just from the daily chart. I want to go to the weekly chart. Clearly you can see the pair is consolidating. So we had this move higher, capped here, another move capped here, another move capped here. So yesterday was the best time to short this one. So if you are quick and shorted this one, then you have made your money. You can see clearly we are getting some good supports coming in at around 142.8, which is a strong level, and as long as we're trading above this level, probably we'll get a breakout soon, and pound may keep on moving higher. But this is also a very good signal of, if we get a close like this, then this is a good signal of a bullish move, and we may probably get a move above 144 and take us higher completely. On the 4-hour chart, however, if you go down to the 4-hour chart, discover that we had this trend line, and the trend line has almost been broken, and we have gotten a retest of the trend line. So if I change the slope slightly, see we had a break and a retest, and now markets are moving lower. So a close above 142.8, a good short opportunity. Again, if you never got a chance to short it up there, you can come in again and maximize on this small number of pips left as you're moving lower to touch the 141.3. So yeah, that's around 180 if you are right, if you get a close below S1 and 142.8. However, if we get markets still staying above this level and we get a close above P, then I'll be looking for R2, which is probably 145.5, and also the 127.2 extension on the Fibonacci. So if I draw the Fibonacci pivots here, so it's about 127.2 coming in here. So that's my outlook on pound, that's my outlook on GJ. Two probabilities, both tell me to stay out for the moment. If we get a close above here, then I'm looking for this. If we get a close above below here, then I'm looking for this. As long as we are sitting between these two levels, I'll try and avoid it. I'm not here to predict, I'm here to read what the markets tell me, and now they tell me to be out. So that's my outlook on GBPJPY, and I hope you've learned a thing or two. So I'll pass it on to Caleb to do his pairs, and we will be done for the day.
So hi guys, so today we're going to look at GBPAUD. For those who trade this pair, today I'll do for you a breakdown from the weekly chart down to the hourly chart, and I will look at that together with the Aussie dollar. So today I won't cover USD CAD, I'll do that next week or maybe the week after, but for those who trade GBPAUD, today's your day. So looking at the pair, we have this is the weekly chart. I've just compressed it, so I won't do the full analysis from the whole monthly chart down to the hourly chart. That will take a whole lot of time, so I'll just do this, and this is the weekly chart, and we've been respecting this trend line that you're currently seeing. And if I return my analysis, we can get to see we have that Fibonacci level, and currently we're respecting 61.8, which is in line or in confluence with our downward trend line. Before we had this channel that you can see that formed up there, we had another channel over there, and now we are respecting our resistance level, which we broke up above. We have that trend line that we are currently respecting. If you break that further down, you get that sort of top trend line that has been respected, that deals mainly with Elliott wave analysis. Further down, we have that channel formation, which is in line with our daily chart, which will break down into that and see. And basically that's the whole of it. We have that Elliott wave analysis within the channel, which we are now completing. And looking at it clearly, we can see a lot of confluences where the market is right now. We are at the top of the channel, we are at the top of the top boundary of the expanding triangle, and we are also touching the downward trend line in line with the 61.8. So zooming in inside to look at it more clearly, we can get to see that formation. We can see the market opened with a gap yesterday, and right now the market is really spiking up above. If you go down to the daily chart, we sort of have that formation, which is also sort of a channel formation I have, or rather an upward triangle, and we can see we are currently breaking the 61.8 Fibonacci level, trying to squeeze the people who already entered short after we closed the gap early on yesterday. So today we've been having a green bullish momentum, and for those shorts which were executed yesterday, we are really squeezing them. For all shorts, now we are above the yesterday's high, and we can see the market is still pushing further up. I'm currently expecting this market to drop within the week or later on next week, but for now we can squeeze the people who already entered short. And if you go down to the 4-hour chart, and this will be clearly seen once we go to Australian dollar and see why the Australia is really pushing further up. So if you zoom and get to see that, we sort of have that Elliott wave analysis which is pushing up above the trend line, or rather we are being pulled towards the upper boundary of the channel formation that we're seeing over here, and the market is currently retesting higher highs which we've not seen ever since earlier on in Feb 2020, earlier on this year. So we are currently retesting those highs. We might see a push to touch the high that we touched earlier on this year, but that's still yet to be confirmed once today's market close and also tomorrow's. But I'm currently expecting in the long term this trend, or rather the trend, to change and have a further downward movement to the downward side. If you go down to the 2-hour chart, just expounding on it clearly and getting a better picture, we can get to see we respected our Fibonacci level 50%, which I don't use most of the time, but the market respected it, so I cannot discount it, and market has been rising ever since. So I had a short trade on this yesterday which I came out, and now the market has been pushing further up. So currently I'm expecting later on in the week the market to drop further down, and we'll cover on that. A partner of mine covered this on the Financial Hub website article, so I'll leave a link below and you can look at his analysis and what he was saying. But overall we're expecting this market to drop further down. So apart from that, I'll go down to Australian dollar and see what is happening on that side. So yeah guys, this is now Australian dollar, and we can see from the dotted lines I drew last week, which I've been having for a while, the market has last week we currently broke down below 2019 yearly lows, and now we are forming new lows in 2020, lows that we haven't seen since 2009 after the financial crisis. So we are seeing the US economy gaining a lot, and currency has been gaining against the Australian dollar. That's why we've been dropping further down. And currently I have also this channel formation which I'm expecting the market to touch the lower end of the boundary. That's what I was saying. We'll compare with the GA. We can see GA on an upward channel. The Australian dollar on the other side is on the inverse type of channel, which is going downward. So the market can push further down if the US dollar continues gaining more strength. As you can see, the dollar index going further up. We can see the Australian dollar continuing to drop. If you go down to the daily chart, we can see same thing has been happening over here. We're also still respecting the channel formation, having that Elliott wave analysis 1 2 3 4 5, currently waiting to finish the 5th wave. And if you go down to the 4-hour chart so that we can expound on the Elliott's that has been happening, we can get to see that beautiful formation which had broken down earlier on last week. So we had that beautiful first wave, a correction of the second wave within a triangle. We had that impulse third wave, which was an extended third wave according to Elliott wave analysis. We had that correction again with a symmetric triangle to form the 4th wave, ABCDE, and currently we are having that 1 2 3 4 5 formation on the 5th wave. So I'm expecting an extended 5th wave, so I'm still expecting this market to move at least a bit further down. So we're expecting that push, and that's why the GA currently is pushing to the upside because of that Australian dollar weakness. So later on in the week we'll see what will happen. As I've said, I'm still expecting this market to move up, but currently we are having a slowdown also in momentum on this pair. So if the dollar continues gaining strength across the board, against all the other currencies, I'm expecting this market to fall further down, and after that I'm expecting to see an ABC correction on this pair, something of the sort. And a further move up, which will basically be an ABCD, ABC formation, before we get any further move further down or further up. So currently that's what I'm expecting. So we'll wait to see what the market will tell us, instead of me predicting where the market will always go. So that's what I'm watching, Australian dollar weakness for the short term before we get that correction to the upside. And that GA, we're still waiting for shorts to be executed while we are currently squeezing the people who are taking longs. If the market goes against my analysis, that means the Australian dollar will fall further down and the GA will go up, breaking the long-term trend line, downward trend line that we've been having for a really long time. So that's not my high probability trade. I'm currently waiting for the opposite actually to happen, that short on GA and long on Australian dollar, after we finish the squeeze of the people who are still taking their profits at these levels. So that's basically what I have for this week, or rather what we have for this week, and we'll do a follow-up of the analysis next week and the week after. So I hope you guys have a profitable week. For all those who are trading other pairs, do in-depth research, in-depth analysis. Do not just take one side bet of a trade. Always look at different alternatives, and that's what Elliott Wave helps people understand. So if you want to take one of our courses, we all have our packages. You can head over to our website and look at our different packages. So have a profitable week, and we'll see you guys next week. Hey, this is Caleb from Financial Hub Forex Academy. This video is to let you know that we are having our first Forex Masterclass from the 11th to the 13th of March. This class will be held in Nairobi town at our head offices in JKUAT Towers, former ICA building. We are only limited to about 10 students, and so far only 5 seats are left. You will be excited to know how to make an extra income away from your day-to-day activities. So be sure to comment below for more information or give us a call to book your seat, and we will see you there.